And what I'm looking at then is where is the market dropping back to? What you can see here is it keeps on dropping back to around about this kind of 84, drops a little bit further towards 82. Mentally now stops down here at 81. You don't want to see it below 81 now. Remember, this is just a quick scalp trade. And the idea being just to try and hold on to this position as we then start to rotate up the range. Target you can see at the top of the screen. So I'm going to have that in mind. I want to get up to around about where all that volume was accumulated. This is a trade that when we did it on the course, I said to the guys, I was like, right, we're going to come up with an idea, plan this idea out, where we're going to take the trade on, and I'll do it for you. I'll record it and I'll show you the results of it. So that was the discussion. And the idea of the trade was any kind of drop down into this zone on a 3.8, 3.9, as long as it's not 4, anything that comes down into this zone, so around about the 84 down to 78 area, is a buy for a move back up through the range. That was the plan. Nice and simple. So you know what you're going to do. You know the numbers you're looking for. Execute. So this is then what happened. What you get, 3.8 on the result. So slightly higher. And we got exactly that result. The drop and then bounce. Of course, it doesn't always have to work, but it played out exactly what we were looking for. So then it's just a question of, can you execute this trade? And I'll show you the way that we went about this. Whenever you're trading an event, whenever you're trading a period with a lot of volatility, you want multiple markets. So I've got huge number of markets up here. And this is the way that we're going about trading. We're only looking at T-note for a trade, an S&P for a trade, and I'm only going to focus on S&P here. But you've got all of the treasuries on this side of the screen. We've then got the S&P, we've got NASDAQ, we've got Euro, and we've got gold here. So there's a lot on the screen, but really what you're looking at is all of them to help you understand the flow of the way markets are moving. So let's get into what's going on. So the idea is S&P down in this area, we're looking for a chance to buy. And I'm going to show you how go about actually scalping a move like this. Now you can see at the minute, S&P is trading around about 81. We've traded down into the zone, but at the top of the zone is 85. So there's two approaches. You either try and buy it down at the lows, or you then try and buy it as it comes out of that zone. We've got in here a couple of lots in the S&P, and this was done on small size, realistic for a new trader. A couple of lots in the S&P, and it's not quite breaking this zone just at the moment. So with that in mind, reduce the size down. So back down to 1, back up to 2 again as it starts to push out the zone. And what I'm looking at then is where is the market dropping back to? What you can see here is it keeps on dropping back to around about this kind of 84, drops a little bit further towards 82. Mentally now stops down here at 81. You don't want to see it below 81 now. Remember, this is just a quick scalp trade. And the idea being just to try and hold on to this position as we then start to rotate up the range. Target you can see at the top of the screen. So I'm going to have that in mind. I want to get up to around about where all that volume was accumulated. And some might say, no, but this is actually trading the data. This is just a quick scalp in my view. It's an opportunity to play it back up to a previous area. The key with a scalp like this as well is when you get there, don't sit there going, oh, but it might go further. The plan is to get to 97. If it gets there, you get out. The idea here we discussed was 97 and then the high of the day, which is around about 07. 07, 08, you can see it just at the top of the screen there. And that was the play. So what I'm looking at now is any of these little rotations back, where is it coming back to? If you really wanted to aggressively scalp, you've probably got an opportunity to buy 92 here. You see how it kind of keeps on sticking around 92. You could buy 92, get out at 95, 96. And that's the way that you go and approach these types of things. There's smaller scalps, and I'll show you that in the next video, these sort of much quicker sort of short-term scalps. Looking at other markets as well, all the other markets are now pushing their highs. This gives you confidence on a trade like this. So as the S&P pushes up, you've got that one contract left. That one left is nearly made you about $1,000. And that's the advantage of these types of events. It increases speed. It increases size of movements. This was a viable move, but it wouldn't have happened in 2 minutes if Markets are trading in normal conditions. And that's the thing you have to remember with these types of things. Events produce action. All of the people in the market have now got a reason to trade and they get on with it. So that's one of the great advantages of understanding an event.